Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Let's keep up with the analysis of the euro currency. So on euro market now stands in the consolidation and sideways action right below the resistance. And overall situation is really very interesting. So because you could find the signs and you could treat this overall situation twofold depending on what you would like to see. So I will show you what bulls could see here and we'll show you what bears could see here. So that just explains and confirms things that we have talked yesterday. So that while you're standing in the consolidation, whatever view you have, you could get the confirmation of that view. And this makes taking the position inside the consolidations a bit tricky until you haven't got any real clear 100% patterns. And whatever you think inside of the consolidation, you always will meet with some part of the uncertainty. I mean, you're depending on breakout that you can't control. That's the most tricky moment on any trading inside of the range. It has some advantages, mostly because you could place tight stop. You could take the position on the quiet market. That's of course some real advantages of this trading, but it also has some minuses, and one of them is that part of the gambling stance while you're trading inside of the range. So if you remember, we have started first from the minor pennant. It was 3 days ago. Then this minor pennant has turned to the larger triangle. So yesterday it was this kind of pattern. Market shows the breakout, but it was not able to proceed it higher and drop right back down, showing the wash and rinse of this top, return right back down, dropping right back to the lows. Take a look that right at the bottom, market shows another minor wash and rinse of these lows and return right back up. It means that the nearest few hours upward continuation here probably will happen. On a daily chart, we have kind of the bearish pattern. So yes, indeed, it looks like some reversal candles or spike up, grabbing the stops above it, sharp reversal and drop. But take a look, that market wasn't able to close below these lows. And in fact, this stands inside of the range of the previous candles. Minor wash and rinse has happened. So that's why we can't treat it in totally as the reversal session. So this is just, yes, it looks bearish, but not strong enough to suggest that immediately downward action should start. When you're looking at the 4 time frame chart, what you could find here, take a look, market shows the flat action, but you have the downward trend by the MACD. This makes you think on the bullish dynamic pressure that market indeed keeps flat action while trend shows bearish direction. And this is the things that bulls could see in the current situation. Now, if you drop your time frame to hourly chart, another pattern you could suggest here, I will contract the chart to explain you better. So, could you recognize something here? Well, I think that you could, because that is actually could become the left shoulder, right shoulder. Here you have the butterfly. It's a kind of the butterfly pattern has been formed, as you can see. It's 127. Right, it's left wing yesterday, right wing, this market skyrocketed up, grabbing the stops and collapsed. This is the bearish sign, guys. And that led us to specify and build the trading plan for the few hours in today's session. Since we have the top around 1085 area, there's two tops, where stands the top of the left arm potential, I choose the XOP target because it corresponds to this top. That's why we are watching for ABC bottom, XOP. That in turn will give us guarded stipple to sell. And minimum target of this pattern, if it will work, of course, if market will not show an upward continuation and taken out of this step, if it will work, we will get at least drop to the 1040 area. This will be AB equals CD. If we talk about the XOP target, it will be, well, around 110 approximately. 110.15. Let's be here. That's two different targets that could be formed. What else we have here? Take a look at the different speed of the price action. Here was slow climbing up, while the sell-off was faster. This is also bearish sign. And you could ask what we should do in the current circumstances, what we need to do, in what direction we could trade here. Well, first of all, we're trading to the upside. We have the bullish positions that were taken through this rally. And we said that you could use this confidence at the vital point for your trades. As you can see, market right now has real barriers to continue upward action. You definitely could see that some problems exist, so it has challenged 3 times this resistance and failed. So that tells you that with the long positions that we already have, risk is really significant. And in such circumstances, I would suggest to those of you who have the long position currently on the market, watch for XOP, grab the profit here totally, or if you would like to take the bet on the possible upward continuation and breakout, which also could happen. We can't exclude it totally. It is possible because today's massive PMI indexes will be released across the globe. So in Europe, Great Britain, European Union, United States, everywhere we will get today the PMI numbers. So that will could bring some volatility on the market. So at least take the 70% of your profit here. This will be great point, because that is potentially a point where market could turn down. And keep the rest with the stop, as we said yesterday, below the confidence. That just should satisfy to all your needs. So you will be possessed for a possible upward breakout. You will get 70% of the profit that we are just leading to the upside with our longs that we have taken this week and last week. And also, your stop will be that will guarantee you some profit, or at least the break even on the rest of your position. So what else you would like to get? If you have the bearish view and you would like to take the short position, suggesting that market hardly will break this area, keep watching for this scenario, because taking the short at 1085 lets you to place stop just 25 pips above this level, just above this top. And it's a very tight stop, but you will get very good potential with a possible breakout. This is scenario if you would like to trade inside this rectangle. Conversely, you could use the breakout out of this level, using these lows and this top, and placing the stop entry orders outside of this level. But I would like to warn you that here this will be much difficult to do, because take a look, market once it just dropped to this level, it immediately meets the confidence support. So placing stop inside of the confidence support, well, it's very risky. So from that standpoint, using the bearish entry order below these lows, it will be more risky than taking the long position above this top, because above this top is relatively free space. We do not have some major resistance levels or something. So market just could climb higher. Yes, we have the 618 support, but stands resistance, but stands higher. Well, it's not, as you can see, very easy to deal currently with the euro by the reasons that we just discussed, but we have what we have, and your choice is, your task is, your work is to decide how you could play this situation out. So, and the final solution that we could use every time is just do nothing, of course. So just sit on the hands and see, wait for some more clear signs, or switch to another market. So that's our view on the euro. Let's see what we will get.